Welcome to the Big Biz Show. Taking care of business. You want fast-talking, hard-hitting discussions on business and finance? Maybe with a barroom slant and some really salty peanuts? We're not counting calories. We're counting cash. Before we get to the man with the financial plan, meet the money team. Costa, Mary, and Greg. Now, Captain Finance himself, Sully.
Hey there, live from the Waffle Brothers Studios, 125 million TV homes strong. Thanks to BizTV, thanks to Bloomberg, as well as American easy for you to say, American Forces Network.
Yep.
In 175 countries and all the cities. Great to have you along today. Mary Burt Godwin, of course, Greg Todoroff, our executive producer. Where the hell's Mike?
On vacation.
Little Funyun hangover?
Well, it could be.
Sure.
You know, have you noticed over the years, Mike's footprint has gone from Fairleigh, Junior Seau, to CeeLo Green. So we got the people from Ozempic coming in next week. No, we really do. To talk about what. That's the thing you were talking about?
I was talking about.
We were talking to a guest about it. Who was that? Oh, the lap band guy.
The lap band.
Yeah.
We're all guests around Mike.
They have to go together.
They do, and
Right?
I think so too. And I think Mike needs to be here for that. I'm just saying.
For sure.
Yeah.
Hey, great to see you today. Howie Font, of course, our entrepreneur, whom we like to call Crash because of the issues that we had last year with him and driving the cars here in San Diego. Howie, how are you, sir? Good to talk to you.
Great to be here. What actually is a Funyun?
What?
I've never
Wait
experienced.
a second.
It is nectar of the gods, damn it.
Truly. Do you have any bags in the back?
No, he doesn't. That's why he has all of his hair, too, because he's never had one.
They're fried onions.
I would say
I mean,
fried onion product.
Yeah,
fried
right.
onion product. That's what I mean.
That's like when they say like the easy cheese that Mike brings in his back
Exactly
pocket.
right.
Yeah.
It's like cheese food product.
Right. Yeah, it's a cheese food
And
product.
when they have bringing you apple juice, it says apple beverage. See,
Exactly.
This is again why he has.
It's in theory.
Hey, aren't you and Devin doing a Howie and Devin go to Boston or something soon for a conference?
That's right. At the end of the month, there's another biotech conference, and there might be a piece. We'll see.
I think.
I'm convinced to.
Well, I think, if I'm not mistaken, Brian Coble from TCVP.
Cobell or Coble?
That's exactly right.
It's Coble.
Actually,
It's Coble.
TCP has
Come
a
on.
huge
Shut up.
Yeah.
You have me so confused now. I don't even know.
What is it? What Jared's telling me? Why are you award-winning director? Oh yeah, 6th annual Gamma Delta T conference. Great.
Oh, right.
That's
If
it.
you're in this, that's what all the kids are saying.
Yep.
Hey, okay, good. So we want to make sure. So we're gonna have cameras there and stuff. Devin, you're gonna go? Okay, very good. Because I think we have a new YouTube channel coming out called Howie and Devin Go to Wall Street.
Nice.
Love it.
And it's because some of the best stuff. Do we have any of that easy, Jared, to show? Do we have one that we can just fire off right now? Okay, next break we're going to show one.
Okay.
I like it.
Only because I think we can maybe kick off a YouTube channel up. I want to monetize this for myself, so you guys don't get lippy.
Right.
All right. Hey, let's talk about the inflation data. It came out today. We actually went down for the third month in a row.
Wow.
So what are we at? We're 3.1 or we're 3%. I know we were expecting 3.1. What's the story on that?
So we hit 3, which is great. That's what all of this rate rising and Fed nonsense has been about the whole time, bringing down the inflation rate.
And the
it
demand.
looks like they're not
bringing
going to
down
wait
demand.
until 2.
So if you go to the Fed Reserve, which by the way is not a federal agency, it's just controlled by Congress. Nobody really knows who owns the Fed Reserve. Nobody knows. It's highly suspected that the people that the organizations that use the Fed Reserve, namely banks, are the ones who actually own it.
Yeah.
And again, I want to encourage you guys to read the book The Creature from Jekyll Island, because this is the biggest scam. Remember when interest rates were 0? Anybody have a 0% credit card or credit loan or car loan? What about credit card?
Yeah.
What about mortgage? Well, mortgage doesn't follow the short interest rate; it follows the long bond. But the long story short is, imagine borrowing money at 0, okay, and then loaning it out at 21%
I like
for everybody's
this.
credit card. It's a license
It's a
to
good
scam.
business if you can get it.
It's a good deal if you can get it. I want to talk a little bit more about this, Howie, between the car insurance inflation, the transportation inflation, the cheese steak inflation that you see at the grocery store. By the way, did you ever break down to buying cheese at Costco because you thought it saved you money? If you want to go have a barbecue, go to the grocery store. If you want to build a house out of cheese, go to Costco. By the way,
Not buying cheese and
Borrow your
bulk,
Costco
sorry.
card.
Huh?
I need to borrow James's Costco card.
Just kidding, you're in damn Costco. All right, more from Howie coming up. Big Biz Show, nationwide, coast to coast, internationally. Let's not forget Bloomberg Financiero, 15 million homes there. Big Biz Show is on the air. Stand by.
We're here at the 2024 Bio International Conference at the San Diego Convention Center, the world's most prominent gathering of industry leaders across all of biotech.
You're watching the Big Biz Show. All right, so we're here to do interviews. Why are we interviewing people here?
Well, we're here to help showcase some of the most innovative biotech companies on the planet that want to show off a little bit and have agreed to do some interviews just for the Big Biz Show.
Oh, nice. Biotech, like flu shots and stuff?
Yes, good job, Devin. That is right. That is technically right.
So you kind of my candy now?
No. Only one a day. We're at the theater area where companies are every 15 minutes coming on to do quick showcases with the latest and greatest of what they have to offer. No, there's so many companies that we have over 10 theaters across a 4-day event every 15 minutes. Lots of showcases, lots to see. We're here with Steve Glover of Zyversa. We just wanted to get a little update. Well, he's a frequent guest on the show, and we're here at Bio Conference 2024.
Yeah,
So, great to be with you.
good to see you again, Howie. Appreciate it. Yeah, Bio, it's a fun conference for all of us. 15,000 of our closest friends. I just met with somebody that I've known for 20 years, and we're talking about, development and what we're doing, and those relationships start at a conference like.
It's the traditional earliest form of viral marketing. So you have the entire industry coming together in one spot to talk to each other, to communicate with each other, and share their biggest breakthroughs of the year. So it really does tend to be where news is made. Devin, we're filming. Back to work.
Talk to you later.
Welcome to the Big Biz Show, featuring insight, analysis, and a lot of stuff that's none of your business. Hold on. This is the Big Biz Show. I think it is their business. Making the markets work for you. Here's the man with the plan, Sully.
My oh my. I didn't realize they actually went to a real convention. I knew they were going to be out. I had no idea. Hey, great to have you along today. Big Biz Show, bigbizshow.com, 125 million homes across the country thanks to BizTV. Of course, Bloomberg, American Forces Network. I think we're also simulcast on radio for Biz Talk Radio Network as well. So Howie Font with us from New York one more time. I want to talk, Howie. The direction for the Fed Reserve is three things. Number one, to keep interest rates low, prices stable, and employment at maximum, the maximum that we can get at any one time. It seems we were going back to normal. So here's a question for you. Do we have a sunset sort of provision here that's not going to bring our interest rates back to where we're used to? Because if we're down to 3% and they're not waiting till we get to 2%, which is the golden ring, it means that technically this strategy of keeping interest rates steady at 6-7% where they've been for the last year should be falling back pretty rapidly. Now keep in mind, that's going to affect you savers in a negative way because obviously the returns are going to be lower. It's going to affect you people with car loans and people with credit cards. Not going to affect mortgages quite yet. Mortgage is tracked on the long bond, 10-year bond. These interest rates are day rates, overnight rates that the Fed charges banks to borrow money. Mm-hmm. It could get down to zero again. But it's good for all of us except for fixed income savers when it drops down. Howie, what's going to happen next with interest rates?
So there's a very high likelihood now that we're going to see a cut in September, whether that's 25 points or 50 is still up in the air. But we're definitely going to see a cut right before the election. I think it's already priced in. Most people think it's already priced in.
Yeah.
So don't expect a market pop. But the market's at all-time highs. The economy's doing well. There is some employment weakness that's starting to come, but we have a pretty low unemployment rate historically as well. So this isn't telling the Fed to stop doing anything. And I think they're going to save a little bit of dry powder. They'll lower rates a little bit to give industry some relief, but that we're not going to zero. They're going to save that for a rainy day.
Well, for a while. The other piece of it, too, is keep in mind, the stock market's not the economy. 44% of us participate in the stock market. 100% of us participate in the economy. So don't get them confused. which is what we were talking about before, because the stock market's been killing it, even though we still see these open-air indicators of low, like employment fell like 28,000, I think, in June, right? So we're going in the wrong direction there, correct?
Yeah, no, we are starting to see weakness, like I said, with the jobs market. And that's going to continue because it is a lagging indicator with interest rates and, like you said, the stock market. So expect it to be harder to find a job. Expect there to be less opportunities if you're out there looking.
And what do we have, 4% now? 4% unemployment?
Just there, yeah.
Okay, because the reality is that a record number of people are working multiple jobs to fight inflation, and that comes down to minimum wage. And minimum wage, what a great intention, what a horrible idea. I mean, honestly.
Talk about that more, because I've heard you say that.
It's horrible.
And I just need to wrap my brain around, because it sounds in theory like it's a great idea.
It's a horrible. Okay, let me ask you this.
Also, California, are we the only state that does it?
Then move.
No, I'm asking.
No, the whole country. If California's cost of living like New York, Miami, Dallas are high, then go to another state. Bottom line is this. If you are a Subway sandwich franchise owner, okay, and the folks on the front line making Greg's vegan something.
Yeah. Kidding me?
I know, he's a meat eater.
Yeah. Extra meat, right.
So, but the point is that let's say they're making $12 an hour prior to minimum wage increase, and the supervisor's making 15.
Yeah.
What happens when you raise them all to 15? Supervisor has to get up too.
Goes up.
Okay, so three things are going to happen. One, the first is prices are going to go up.
Yeah.
Well, that's like cutting off the top of the blanket and sewing on the bottom of the blanket.
Right.
Yeah.
If prices are going to go up, who the hell cares if you make more? You're paying the same.
Right.
Number two, that Subway sandwich owner, let's say they net every year $50,000. They're not going to take home $49,999.
No.
I promise you. They're either going to fire people, they're going to go out of business, they're going to increase prices. Mm-hmm. And by the way, minimum wage has never been meant to be a living wage. It was meant to be what we learned how to work with, right? You went to, you worked, exactly. and you learned how to go to work.
High school stuff.
Truth is, though, minimum wage is not helping families. Most people in this country that earn a minimum wage are working multiple jobs, and they don't need to work. It's extra money in a full-time job's family. So if you look up the data, let's say the wife works and makes $120,000 a year, the husband goes out and gets a minimum wage job just to add to the pile. It's not necessary. It's not. It was never meant to be a long climb to the middle.
Right.
It was, and that's why, because the outcomes are never going to work. If by the stroke of it, why not make minimum wage $50 an hour then? If by the stroke of a pen you could raise it to 50, why not raise it to 50? Why not?
Well, then you'd go out of business.
Well, yes. Well, what makes you not going to go to business at 15? I mean, where does it stop? Is the point. If by the stroke of a pen, government can tell me that you're worth more because they say so, let's say you're not worth $10 an hour. I'm not hiring you.
So is there data, because the increase to 20.
There's data on everything I'm saying. And
yeah, I know. I'm just wondering, because it was just the last few months, since April, I think, April 20th, I think, is where they raised the minimum wage to 20 here in California at fast food.
For fast food, right.
Fast food only.
Yep.
So I'm just wondering now what the last few months of data has shown for those businesses.
Well, you're not going to see Bureau of Labor statistics for 6 months, first of all. But number two, if you can tell me how most of these are franchised. Now, it's different. Let's say McDonald's has corporate stores and McDonald's has franchisees. I guarantee the corporate stores can absorb much more than the franchisees can. Right. But the franchisees are paying a franchise fee every month on their sales. They're paying their real estate fee. They're paying their food costs, which is the number one cost, and they're paying labor costs. Yep. Well, and when labor costs, do you realize back in the 70s, the average profit margin on a business was 12%. You know what it is now? 2%.
Wow.
The math doesn't work. Whoa. You can't just increase your number one top line OPEX expense by 15% and not, the math doesn't work. Have you seen the USDebtClock.org? That's what your balance sheet would look like. Yep. Look at a speedometer where there's no way, you're not taking in enough money.
Right.
So, Howie, am I on the same page, or are you in agreement with me?
No, I'm completely in agreement with you. It's proven that it takes jobs, and I think an important point, Mary, is to note that who needs the job more? Someone that can command a $50 wage is going to be able to go out and find a job. Minimum wage workers need those entry-level opportunities to build skills. So it's kind of been destructive the whole time it's been implemented. It's been kind of a mercy the government has to put in this floor so that there's, kids don't go to factories and we don't work on Saturdays, that kind of thing.
I think the presumption is also that I'm not going to pay my employees.
There's always trade-offs.
I think the presumption is I'm not going to pay my employees fairly. Why take that presumption?
Or as many of them, yeah.
Yeah, I mean, I'm thinking that I don't need to be told who to donate to. It's my money. Right. I don't need to be told how much I'm going to pay my employees. Listen, they're going to walk with their feet. They're going to vote with their feet. But at some point, if you've got margins of 28%, sure, you'd be kicked down a little bit of dough. We don't have those kind of margins. Very few companies do. And the consultant on the corner, the deli on the corner, the dry cleaner on the corner, I promise you, is making about a 2% margin, profit margin. And they're not going to take anything home less than what they've got. Hey, you know what? We forgot. We have a birthday on the list. Someone in here.
We gotta sing a song.
Come on, Jared, get out here. Jared Coleman, our Emmy Award-winning director.
Yeah. Candles are gonna light this
celebrating
fire
his 20th anniversary of his 15th year.
Yes.
It's got the birthday song up there.
You coming out, Jared? Big Biz Show, bigbizshow.com. Where the hell's Jared?
Hey! Happy
Look
birthday!
at that. It's the birthday boy.
Make a wish, birthday boy. Hey! Well done, well done.
See you in a minute.
Happy birthday, buddy.
God, I wish Costa was here to sing some crappy version.
Oh, me too.
Listen, babe.
Don't you miss it?
Oh, come on.
That awful noise.
There's some awful noises.
There's something about an awful noise.
Hey, we had a guest on the air when I was out of town. I think it was in Europe, if I'm not mistaken.
I believe so.
Saving lives.
Yeah.
Listen, I do nothing for a living. I'm just an entertainer. Doesn't that stink?
And a darn good one, boss.
Thank you. Andrew Warburton is the founder and president of Kind One Technology. Of course, they are embracing the future of real estate. I'm so sorry you had to be subject to Mike Costa, who hosted last time.
We actually had a good time.
I'm sure you did.
It went pretty well.
Never got to the point. Nobody ever saw your show. I'm totally kidding.
Yeah.
It was
still a good time.
I did watch it. And it was fantastic. It was good. I wanted to have you back.
Thank you.
For those people that didn't pick it up last time, and for the international audience on Bloomberg EU, which we're doing a pilot for, talk about top down. What are you guys up to?
Look, it's a platform that we've brought out, a destination for buyers, sellers, and agents to come together. It's AI certified agents. We bring all three of them together to create a win-win environment. And our industry is like super, super traditional. It tends to be sides. I came to America from London and had nothing, and out of nothing was able to create.
Yeah, well, you were 4 years old, so fair enough.
I was 6. So why not bring people together? So the whole idea of iConnect is a platform.
What is an AI certified agent?
I just wrote that question down too.
Yeah, Siri asked it, actually. Go.
It's a little bit like a dating site. You know, when you swipe right and swipe left, see a picture and the person's nothing like it. Agents have been a lot like that. You swipe right, swipe left, pick an agent, there's the picture, what do you get? Right? So performance, availability, all those factors that consumers want rather than the things that agents push on them.
Do you think consumers don't spend enough time conducting due diligence on agents?
100%.
Me too.
Absolutely.
I think it's like who's the guy or gal's name on the picture of the house, right?
Yeah.
I don't think you drill down.
Well, now the internet makes it easier to do that, and now your company.
If we would do it, I don't think we're doing it. There's no easy on-ramping way to do it. That's what you created, right?
That's exactly right.
That's great.
And you got to think Rich Barton. That was a huge revolution. Really, we've got the same industry we had in 1905. People don't really think about this. It's the same industry as 1905. 1940, after the 20s, people were doing the same thing they are now. Now Rich comes along, all of this transparency of information. Transparency is the future, right? Mm-hmm. But still with agents, how do you really find out about them? So we've built AI and you certify their performance, see how available they are, that will affect you as a consumer. Now you can search them, tap on them, video conference with them, in-app, totally secure, no threat, no cold calls, no sales calls.
Oh, wow.
Right. So you're picking agent first, home second type?
Yeah, you just go onto our iConnect map, zoom in, tap the dot, open it up, look at their profile, read about them, tap the communicate, in-app communicate. Now you interview, you decide, do I like this guy, do I like this girl, don't I? If you do, check out this. Now you assign what we call an iConnect opportunity, right? If the agent accepts it, you now have literally released an appointment, and now with our tracking technology, if I meet you at 2:00 on Saturday to see a home, I can see your car coming to the house, you can see my car coming to the house. You got total transparency beginning to end. And to Sully's point, we have not been able to do that until now. Look, using an agent's like blind dating. It's exactly the same. Even if
it is.
Look, even if it's a referral.
I can't tell you how many times I walk in to look at a house and turn right around because the person there just
100%.
like I'm out.
But you're real strong. A lot of people, particularly first-time buyers, second-time home buyers, they don't know how to say no. They don't know how, right? So they're embarrassed.
And
They go,
they trust the process. I mean, I know I used my brother-in-law because I didn't know where to start.
Boy, was that a mistake.
So I hear this. Oh, you see, and that's the whole thing. You use somebody because you trust.
Yeah.
So how can we create a platform where you have trust with somebody you don't know?
Because
That's the question to
Because I
ask.
think at the end of the day, you're saying, well, I should trust them because the person listing the house trusted them, so they might be okay. I mean, and that's as far as decision making goes, which makes no sense whatsoever.
Yeah, or you trust a dentist because he fixed a filling, but now you've got multiple implants. You go to the same dentist.
Right.
So you trust an agent because they help you buy your condo. Now you want to do a 1031X on multiple apartments. Is it the same person? And how do you sort that person? And if they say that they're full-time, was that full-time 20 years ago, 10 years ago, 5 years ago? What about the last 5 months? I'm buying a house right now, not 10 years ago.
Yeah.
So by the way, the whole way our industry is structured is changing. I go to all these conferences like you do. You go on the stage, it's the same stage, essentially, that I went to 40 years ago. You have super intelligent people coming on board. The big changes are transparency of data. That's Rich Barton's whole gig, right? And the second is how we now manipulate data to discover who's the highest intent buyer or seller. That's changed. But the way the thing operates has not changed, literally since 1905. Now the 4 principles of real estate are under the microscope at the same time. Property availability, crisis. Interest rates, crisis. Not as high as when I came here to America, but still nonetheless high, right? So agents, crisis. The whole way we're being changed. Sitzer Burnett, the Department of Justice, Consumer Federation of America, crisis. All of these crises are coming together. We need a new stage.
Okay, so here's my question. 2 questions. The second one's going to be, what's the business? I'll give you a chance to think about that one. Let's say I have a house over here that I want and an agent over here that I match with. How do you match those two together? Now she's buyer's rep for me at that point?
Yeah, got it.
Now what if I've already listed my home with someone? Well, I don't know the rules on this. What happens when you decide that I'm going to try this AI platform here and I'm going to match with a better agent?
As the seller or the buyer?
As a seller.
So as a seller, it's tricky. So this is another thing that's changing. So through NAR and CAR, there are all these protection systems. I'm sure you're really familiar with what's going on. So there's this protectionism, essentially. It's much like when I grew up as a boy. I would go with mum to the shops to help her to bring the groceries home. But every year, as I grew up with Harold Wilson, I'm sure you know about Harold Wilson, every September, every October, every November, you'd either have gas or coal would go on strike. Why? Because as it got colder in England, I'm sorry to say it, eventually elderly would pass away.
Yeah.
And so now you've got this pressure, you just talked about it, for higher base pay, right? So this whole idea, we then had sympathy strikes. You went to the stores, you couldn't get food. It was this whole idea of government intervention, right? You just addressed so well. So the same in the real estate industry. NAR and CAR have protected a certain structure of commission sharing. So now part of that is you can't break your contract. If you list a home and try and break a contract, it's extremely difficult to do. Similarly, now there's a buyer-broker agreement. It's been out a long time, right? You can't break it. So what the Consumer Federation of America is pressing for, what the DOJ is pressing for is, hey guys, let's have an open capitalist base here. The whole idea of capitalism is that people have choice. So let's have a free choice. Let's not lock people into contracts. So the new buyer-broker contract, you're allowed to cancel it at the will of the agent or the consumer. Now I answer your question.
Well, that's free market economy. Fine.
Now that's it.
Right.
So, but for the seller, still not there. For the buyer, sorry if I'm.
Okay, no, that's good. Here, but I think I see on your
Hopefully I answered
on your buyer. No, which makes me think, how much time did you spend finding your house or your land, compared to finding your broker? I spent 0 time.
Oh my gosh.
Like 0.
Yeah.
Yeah.
You spend, let's go visit 6 houses,
Yep.
and whatever broker's assigned to it is what you get. So this has got to be a buyer's rep sort of platform for now.
It's actually both, but I would say the predominant crisis is for the buyer rep, yeah. And it's availability. Look, you work extremely hard. Bob works extremely hard at biotech in San Diego. He's coming back. He's got an hour off work.
Yep.
He's got 1 hour. Needs to go home, tell his wife, we can go in and see 123 Main Street. Can't reach the broker. The broker comes back because he's doing life-work balance, you know, 3 days later, but this guy's missed his opportunity.
Yeah.
So we do this whole thing. We track them in real time. You can actually go on as a consumer, tap on it, see who's available, tap on the in-app communication, set your appointment, all in real time. This idea of tomorrow It's right now. Everything else we do in our economy is that way.
Yeah.
Think about even brokerages and Robinhood and all that stuff. How you can, my kid taps on and buys a 1/10 of a stock in Tesla. He's 14. Of course, he does it through my account, but you get the idea.
You got to come back with us again. This is fantastic. His name is Andy Warburton, founder and president of Kind One Technology, iConnect.com. And the app's name is?
iConnect.
iConnect.
C-O-N-N-C-T.
All right, C-O-N-N-C-T. There you go. Andrew, come back with us, would you?
Thank you very much.
Stuff.
Would love to.
This show. See you in a minute.
Loft 100 Studios, The Big Biz Show, our affiliates, and our hosts are not registered investment advisors or broker-dealers.
Our show hosts make no commitment that the purchase of securities of companies profiled or otherwise mentioned in our programming
are suitable or advisable for any persons, or that investment in such securities would be profitable in general.
Given the nature of our company's profile and the lack of an active trading market for their securities, and investing is highly speculative and carries a high degree of risk. We profile selected publicly traded and privately held companies on our program.
Most of these companies that we profile have provided compensation to Loft 100 Studios and its host for the profile coverage.
3, 2, 1. From time to time, we sell shares of the companies profiled in the open market that we receive as compensation for coverage of client companies.
But never sell stock if we are speaking about, interviewing, or covering a public company who has paid compensation.
Specific questions on compensation can be obtained by contacting producer at sullyandgroup.com.
Listeners should verify all claims and do their own due diligence before investing in any securities mentioned on this program.
Investing in securities is speculative and carries a high degree of risk.
We encourage our investors to invest carefully.
And read the investor information available on the website.
On the Securities and Exchange Commission, SEC, at www.sec.gov.
Or the Financial Industry Regulatory Authority, FINRA, at www.finra.org.
Well, we covered our legal bases, apparently.
Yep.
Big Biz Show, BigBizShow.com. 125 million TV homes strong, BizTV, Armed Forces Radio Network and Television Services, as well as Bloomberg Financiero. Great to have you along today. Mary Bird Godwin, Greg Todoroff, our executive producer, Mike Costa, nowhere to be found. I'm thinking 48-hour mandatory.
Might be.
What is that called? A 1048 or whatever?
150.
And of course, the Big Biz Show band. There you go. Thanks, James. James, the only one gets paid. James is the only one gets a paycheck today. He's the only one who rehearsed that. Hey, Paul Travers is a frequent guest and one of my favorite guys. He's CEO and president of Vuzix. Vuzix is a publicly traded company under the stock symbol VUZI. We heard from Vuzix, if I'm not mistaken, from one of their shareholders.
I believe so.
We got him on the air. He was in studio just a few weeks ago showing us probably the coolest thing.
Try those glasses on. I want a pair.
I do too.
Yeah. This is basically the next gen of where we're all going in life in a practical way, not in a way that's almost impossible to use. iVision, sorry. They're recently entering into the AR space, as I just said, iVision Pro. But these guys have figured out a way to fit into the picture on day-to-day life and work environment that is pretty much uncomparable. And I would let them spend a few minutes talking about it. Paul, great to have you along today, sir. Good to see you.
Yeah, likewise, Sully. Thanks for having me.
What is this? Did you hole up and decide not to shave and turn into Ernest Hemingway over the line?
Man, does he have a nice beard.
He has a great beard.
Smokes.
Fantastic. Hey, take it from the top. For those people who haven't heard you before, because I think it's important to reset here on what you're doing until we get you in studio again here in the next couple of weeks. But talk about that.
Yeah, we make smart glasses. And when we started, Sully, we were making glasses that were like these big VR headsets that you see even today, like Meta sells. And we learned quickly that if you actually were going to go to work with them, and by the way, these first pair we made were for consumers to play games, Duke Nukem, Quake, and all those games. It was 1993, so it's quite some time ago. Yeah, we've been at this. We learned up front, though, we were working for the U.S. military. We were trying to make products for enterprise where you actually go to work. And these great big heavy things obviously didn't work and wouldn't work. To try to pick parts out of a warehouse for 8 hours with a VR headset just doesn't make any sense. And so we've been on a path to make fashion-forward, lightweight glasses that you can use for a full shift. And you can see the pair behind me with the yellow helmet, safety. Those things weigh ounces compared to pounds for our competition. And we have companies today that use those glasses 24/7 in warehousing, distribution centers. We have doctors that use them in the operating theater, Doctors Without Borders. One doctor's down in, let's say, Africa someplace, and he needs help doing this open heart surgery that he's learning a new technique for. The expert that's in San Diego puts the glasses. The guy in Africa has got the glasses on. The expert sitting at a terminal, like a Zoom terminal. It's a special one for HIPAA compliance. And he can literally draw on the screen, and the doctor who's doing the operation, looking at the heart, have a circle over the portion of the heart that he might have to do the work. So these remote support, remote helping, remote teaching tools, maintenance kinds of applications, there's a whole bunch of them out there in enterprise. The opportunity is literally going to be in the 10, 20, 30 million units annually kind of basis. So it's $1 billion industry for enterprise. But it's taking time. The applications take time to catch up. This is a space where IT departments have to get involved. That's happening, though, for Vuzix. Where it's really getting exciting for us, though, is when we were working with the Special Forces guys, they asked if we could make glasses that looked like Oakley-style sunglasses so they could get rid of their tough book. That's right. Fashion-forward glasses that people will wear every day of the week. And to do that, we've had to develop some really amazing technology at Vuzix. We have a manufacturing facility here that makes these things called waveguides. This pair of glasses right here has waveguides built into them. And you put these guys on, you guys got to play with them once when I brought them in studio. And you see images floating out in front of you like they, belong there, but they're 2 or 3 feet out in front of you. They can be connected to the real world. They can be connected using AI. What am I looking at? There's applications like mapping services. How many times you walk outside and you're in New York City trying to find the Italian restaurant and you keep looking down at the phone and trying to, with the glasses on, literally the arrow will be painted on the road in front of you, showing you how to get to the Italian restaurant.
Paul, I remember when you were in studio here, and one of the pairs of glasses that we were experimenting with had kind of I think it was meant for the operating theater, and it showed the blood pressure and the heart rate and everything else, which is fantastic. And I guess my question is, that's just, I'm assuming from talking to you, that's just the tip of the iceberg, because as technology gets more robust and there's more adoption on the product, the sky's the limit. What's next, do you think?
This is what's so cool about how connected everything is today. With a connection to the internet, AI engines running, you're going to have your own personal attendant with you 24/7, helping you get through life, making sure you're getting the things that you want, that you care about. When you're in the store buying products, how many calories does it have? Did it get made by child labor? Yeah. All of these kinds of things. It's just going to open up the connectivity of the real world and the digital world together, which is hard to do today. People are trying to do it with augmented reality on the phone. You point the phone at the space in front of you and you look at the back screen. You're not going to have to do any of that. Put the glasses on, you don't need a phone anymore. You can dial, you can talk, you can pick your favorite country music. All of this stuff will just happen through voice and connectivity, and the entire web connected to the real world will be at your beck and call.
Hey, Paul, how far away are we from that? From one of us being able to go buy a pair of those and go into the grocery store and check to see how much calories are in a Funyun pack?
So we have a partner firm that we're working with right now. They're an AI company, and they've developed the applications to do that today. And our higher end units, you could do that in a store today, but they're expensive and they look a little odd, like the yellow safety glasses helmet. The stuff that looks like this is coming right around the corner. Wow.
So for you, what kind of market size do we have here? I mean, the business has got to be in the billions at some point.
Well, if you think about it for a minute, let's just compare it to the smartwatch.
Yeah.
There are 300 million smartwatches sold a year right now. 300 million smartwatches a year. These waveguides that we sell as part of these glasses, they can sell for about, let's say, $50 a piece in a pair of glasses. You need a pair of them. So $100 times 300 units. I mean, it's, and being able to make those waveguides, having good margin on them at those kinds of price points, there is not many, if any, companies on the world that can do
Paul Travers, President and CEO of Vuzix. Super exciting. Our favorite client and product. I mean, you could be on every day if you want. Because we can talk about it. Paul Travers, of course, Vuzix.com. Stock symbol is VUZI. Look at that pair there. My goodness.
They're so cool.
Smart glasses for the connected workplace. Thanks, Paul. See you soon.
You're welcome.
Big Biz Show. BigBizShow.com. Look at that. I want that exact pair.
Yeah. Yep.
The little Buddy Holly action.
Right.
Good stuff. We'll see you in a minute. BizShow.com is our website. Sully here, Mary Burt Godwin, and Greg Todoroff in studio. And it's time for our Gold Guy.
Oh, I love it.
Like that? David Garofalo, CEO, Chairman of Gold Royalty Corporation, where he brings over 35 years experience as a senior mining executive, including some of the largest mines in the United States. David, thanks for coming by again. Good to see you.
I'm delighted to see you too. Thanks for having me on.
Hey, talk about, give us a top down on the state of the union and the gold right now, because we're seeing markets at all-time highs. We're seeing gold hold its own a bit. What's the future look like for you guys? This all kind of bodes well for you guys as a royalty company.
Absolutely. The gold price is achieving all-time highs every single day, new all-time highs. Interestingly, equity investors didn't get the memo, and the share valuations have never been more disconnected from the underlying commodity. It's a deep value play right now.
I know a guy who knows a guy that can.
That's right. Yeah.
Hey, talk about the macroeconomic and inflationary environment. Inflation's down to 3.1%. Gold's been a great hedge against that inflation, but I don't think gold's going away anytime soon. I think there's probably a reason to say we should be bullish on gold regardless of the inflationary picture right now, correct?
Well, actually, I think gold is telling us the inflationary picture is quite a bit worse than what the Federal Reserve and other statistic agencies globally are telling us. Underlying inflation on the ground is still double-digit territory. If you're buying food, energy, hard goods, that is still inflating dramatically. And gold is an agnostic barometer of what real inflation is. That's why it's going up and achieving all-time highs in every single major currency in the world every day.
Hey, let's talk about what you guys do as a royalty company. I know we've talked about this before, for some of the people who haven't heard you before. It's you guys are basically financial institutions for the mining industry. You're at the top of the food chain. Talk about that, because it's really, in my mind, the safest place to be if you've got the capital to run it, correct?
Yeah, we're effectively a bank. We're providing capital to the developers, the explorers, the operators who otherwise can't access capital. As I said, there's a disconnect in the equity markets. The markets are really not open for the operators to go and raise capital to build new mines. We're providing that capital. We're filling the breach, if you will, and we're getting a royalty back in return. In other words, we're getting a percentage of the gross from the mine and protecting our shareholders from the underlying cost inflation and operating capital costs at the mine site. It's the best of all worlds. And on top of that, we get leverage to the exploration success of the operator. So as they continue to drill out their deposits, our royalty extends to any growth they have in reserves, but we're not paying for that exploration upside. Those exploration budgets are fully funded by the operating partners that we have royalties with.
Dave Garofalo, Chairman and CEO of a company called Gold Royalty Group, stock symbol GROY. There was an Investors Business Daily, an article just recently talking about how gold royalty companies are a safer and better investment versus straight gold mining companies. Can you expound on that? Because that's been something you and I have talked about off air a number of times.
Yeah, well, there are a couple of dynamics that are overhanging valuations in the producer universe. One is cost inflation. Operating capital costs continue to inflate at the mine site. Royalty companies protect you from that because we get a percentage of the gross. Doesn't matter what happens to operating capital costs at the mine site. The other dynamic that producers are facing is shrinking reserves. That's why there's been a proliferation of M&A in the producer universe. Newmont took over Newcrest, Newmont took over Goldcorp, Barrick took over Randgold, Yamana was taken out. All these big producers are merging because if you're not finding it in the ground, you're going to have to acquire it. So that's a zero-sum game for the producers. All they can do is consolidate to sustain very high production rates, but that's not creating value for investors.
Hey, David, let's talk about the expense it takes to run your business. You guys have low overhead. I mean, that's the one thing which is probably the most attractive. Zero debt, easy to run, plus diversification. Speak on that for a second, would you?
Yeah, for sure. I could fit everybody in my company around my dinner table. It's a very small group. Our G&A costs are extremely low. We could run a business 10 times the size with the same human footprint. We could have 2,000 royalties. We have 240 royalties currently, but we could have 10 times that with the same number of people. We're running contracts at the end of the day. We're lenders and lenders of last resort to the mining side, taking royalties back in return. So we're not operating the businesses. When I was running Goldcorp, one of the biggest producers in the world, we had 20,000 employees. We had a dozen operating assets. I had no room to diversify. There was just no potential way for us to increase the scope of our portfolio of operating companies. It was impractical for us to manage more than a dozen operating mines. There really is an infinite capacity for diversification in the royalty business. That's another attractive feature of our business.
I've got a question for you guys because in speaking to some folks emailing after you were on the air last time, the big tiebreaker for you, the big differentiator for you is the fact that you have 240 royalties at this point. You've got U.S. and Canada. You broke into free cash flow in the beginning of this year. Talk about all those things as well.
Yeah, no, absolutely. We have over 240 royalties, but I think more importantly, we have royalties on 3 of the 5 biggest producing gold mines in North America, in Nevada, Quebec, and Ontario. So we have a quality proposition. It's not just about throwing as many royalties against the wall to see what sticks. We have some underlying assets, cornerstone assets, if you will, to provide us meaningful cash flow for decades to come. So we have a foundational element to our business that will spit out cash flow long after I'm dead and buried. And that's the beauty of our business. It's perpetual. These royalties, 240 plus royalties, are completely bought and paid for. We have no capital calls on them. All we do is effectively collect checks. That's why our G&A costs are so low, why our margins are so high. As we achieve optimum cash flow over the next several years, and we're growing 60% compounded annual growth in revenue over the next 5 or 6 years, that's all going to fall right to the bottom line, and we're going to have over 90% margins in our business.
David, are some of those royalties have to be renewed at some point in the next several years? And at the same time, are you actively seeking other opportunities to create gold royalties for other mines?
Well, they don't need to be renewed. They're perpetual. They're adhered to the mine site at the project level forever. And that's the beauty of our business. And that's why we don't have capital calls on any of our royalties. We own them forever. But that being said, we're always looking to add to the portfolio. Recently, we bought a stream on a copper mine, actually a copper silver mine in Bosnia, very long life mine, gives us some exposure to copper in addition to the significant gold exposure that we have. And copper is probably next to gold, the metal that I'm most bullish about, given the fundamentals of copper in its demand for decarbonizing the global economy.
Hey, what is the best gold mining jurisdiction right now in the world?
Well, interestingly, 3 of the top 5 in the world are Nevada, Quebec, and Ontario, where we have 80% of our portfolio by number and underlying value. And the reason they're always in the top 5 is because they have low political risk, low regulatory risk, but most importantly, they're the most geologically prospective gold districts in the world. And that's why we're there.
We got good stuff. Listen, I want you to come back. I want you to come back on the air, but I want you to come in studio at some point.
That'd be great.
Time to get you in here, my friend. David Garofalo, Chairman and CEO of Gold Royalty Corp, GROY, is the stock symbol. Oh, there's Costa. He's driving up the mine. That does it for us. Big Biz Show. See you tomorrow.